I'm going to discuss in this video Trump's proposal to eliminate the taxation on Social Security benefits. Trump posted a message in all caps on July 31st that said, quote, "Seniors should not pay tax on Social Security," end quote. 85% of my Social Security benefits have been classified as taxable income since I started to receive them about 14 years ago. I do not want to know the total tax that I've paid so far. The first step in the calculation is to compute what the IRS calls, quote, combined income, end quote, which is the adjusted gross income plus non-taxable interest and 1/2 of the Social Security benefits, and then some deductions and exclusions are allowed. With a combined income above $34,000 for a single person or above $44,000 for a joint filing, up to 85% of the benefits can be included in taxable income. I use TurboTax to do my taxes and do not pay any attention on how they arrive at including 85% of my benefits as income. I just assume that their calculation is correct and accept it. If the combined income is under $25,000 for a single person or $32,000 in a joint filing, there is no tax on the Social Security benefits. About 40% of recipients are below the income threshold and pay no taxes on their Social Security benefits payments, according to the Social Security Administration. But just as an example on how this can impact a retired senior citizen, assume that the person has a $20,000 annual Social Security payment and has enough combined income, which includes some tax-exempt interest from municipal bonds, that requires including 85% as taxable income, or $17,000. If the marginal tax rate was 15% for that person, then the tax on the annual Social Security benefit would be $2,550 or 12.75% of the total annual payment made by Social Security. So this is a significant payment. Most of the rest of the senior citizens who pay federal income taxes on their Social Security payments would have benefits taxed at 15% or lower marginal tax rates. The hit would rise as the Social Security benefit number and the marginal tax rate rises. According to the Social Security Administration, the income tax on benefits amounted to $85.7 billion in 2023. Of that amount, $49.8 billion went into Social Security's Old Age Trust Fund, $900 million went into the Disability Trust Fund, and $35 billion went into the Medicare Trust Fund. All the income taxes collected on Social Security benefits go into the Social Security and Medicare trust funds. Even with those revenues generated by the federal income tax on Social Security benefits, the funds in the Social Security Trust Fund will be exhausted according to the latest estimate in November 30, 2033, and payments to beneficiaries would then be automatically cut by 21%. It is not like the government has planned ahead that well on meeting its future financial obligations for either Medicare or Social Security. Taking away close to $100 billion a year in revenues paid into those two trust funds that is raised from the taxes on the Social Security benefits would require that the money be found somewhere else. And even if that could be done, which is probably impossible for Congress to do, it would not solve the inadequate funding for both programs. Congress has been unable to solve the pending insolvency of both trust funds, both Medicare and Social Security, with the revenue generated by the tax on benefits. And that just highlights the dysfunction in our government. It would not be reasonable, rational would be a better word, to assume that Congress could avoid benefit cuts by taking away a major revenue source for the two trust funds. I am citing in the More section column below a article published by the Committee for a Responsible Federal Budget on July 31st, 2024, that provides estimates on how much revenue would be lost by the two trust funds from eliminating this tax on Social Security benefits over the 10 fiscal years starting in the fiscal year 2026. The government's fiscal years start in September. With no changes in benefits for the retirement age, the estimate is that the cutting the tax on Social Security benefits will accelerate the bankruptcy of Social Security by 1 year to 2032. It moved Medicare's insolvency date up 6 years from 2036 to 2030. I have not seen a proposal on how Harris would address this problem. The most likely change that a Democrat would propose, and that she has proposed in the past, and Biden has proposed as well, would be to increase the payroll contribution limit to somewhere in the $200,000 to $400,000 annual range, and to include more than just earned income in that contribution limit. That would be including things like capital gains, interest, and dividend payments. I will include some references in the more column below.